Hello, I'm Bernard Hickey from interest.co.nz and welcome to a special report on a huge opportunity for monetary policy. What I want to talk about today is the likelihood that the official cash rate might fall as low as 5.5%. Currently it's 7.5%. And this opens up a huge opportunity for the Reserve Bank to reclaim control of monetary policy. What do I mean? You might say, well, the Reserve Bank controls monetary policy already. Well, it does, but the brake pedal and the accelerator pedal are very spongy at the moment. When it moves, when it cuts the official cash rate or lifts the official cash rate, it takes an awful long time for it to affect the real economy. That's because more than 80% of New Zealand's mortgages are fixed rate mortgages. They don't roll over for every 18 months, 2 years or so. So it takes a long time for that monetary policy signal to get through to the housing market at least. In Australia, more than 80% of mortgages are variable rate mortgages. And as we saw yesterday, when the Reserve Bank cut their official cash rate, that immediately went into lower interest rates and therefore more money in the hand for Australian consumers. Wouldn't it be great in New Zealand if we had more variable mortgages than fixed rate mortgages from a monetary policy point of view? Now, until now, fixed rate mortgages were simply cheaper than variable rate mortgages, and of course everyone went for the cheapest option. That's because banks access their money from the rest of the world through the money markets to get cheap international money. They then passed it on to New Zealand home buyers with those fixed rate mortgages. And everyone will remember that the campaigns through 2004 and 2006 with those cheap 2-year fixed rate mortgages, the unbeatable campaign for example. And that meant the Reserve Bank was a little bit powerless to actually slow the economy down. With the prospect of an official cash rate being cut to 5.5%, there is the prospect that it may actually be cheaper to go for a variable rate mortgage in the next year or so. Because with a 5.5% official cash rate and a margin of around about 250 basis points, 2.5% on top of that for a variable rate, you're looking at around about 7.5 to 8% for a variable rate mortgage. Currently, the fixed rate mortgages are around about 8.7% for the big banks and 7.99% for Kiwi Bank. So that says it may be cheaper for a lot of people within the next year or so to go for a variable rate mortgage. That gives the Reserve Bank a chance to reclaim control of monetary policy. And for New Zealand finally to have a positive yield curve. I'm Bernard Hickey with a special report on a huge opportunity for New Zealand's Reserve Bank.